Welcome to today's explainer. Look, if you've ever felt that awful sting of a trade going entirely wrong just because, you fat-fingered the wrong button, or if you're just sick and tired of blowing up accounts because the sheer mechanics of trading feel completely overwhelming, well, you are in the exact right place. Today, we're putting together the ultimate execution playbook. We're going to transform you from a hesitant clicker into a totally confident operator using the Exness and MetaTrader 5 platforms. We're going straight to the source material to give you the exact step-by-step process to stop blowing up accounts and start executing your trades safely and systematically. Okay, so here is our flight plan for today. We're covering 1. The language of trading, 2. Setting up your demo, 3. Executing your first trade, 4. Mastering risk management, and finally, 5. Your daily practice routine.
All right, part 1, the language of trading.
Before we even think about stepping into the trading flight simulator, we absolutely have to understand the controls. You wouldn't try to fly a jet without knowing what the altitude dial does, right? So let's start with your 2 most critical safety controls. First up is the stop loss, or SL. Think of this as your absolute safety net. It's an automatic order that limits your loss and immediately pulls you out of a trade if the market moves against you. You literally never fly without it. On the flip side, you've got your take profit, or TP. This is your target. It automatically locks in your profits when the price actually hits your goal, so you don't have to just sit there staring at your screen all day. Next up, we have pips and leverage. A pip is just the standard unit of measurement for price movement. If a currency pair moves up a tiny fraction, we measure that movement in pips. Now leverage, that's your double-edged sword. It's essentially borrowed capital from your broker. So a leverage of 1 to 100 means you can control $10,000 with just $100 of your own money. It drastically magnifies your control for sure, but it also magnifies your risk, which is exactly why the source guide stresses handling it with extreme care. And this brilliantly illustrates how we size trades using what are called lots. A standard lot is 1.00, and that controls 100,000 units of currency. That is absolutely massive. A many lot is 0.10, controlling 10,000 units. But then we have the micro lot at 0.01, controlling just 1,000 units. And listen, this right here is the absolute safest place for beginners to start. It keeps the financial swings incredibly small while you're still learning the ropes. Moving right along to section 2, setting up your demo. The guide is super clear about not risking real money too soon. You really shouldn't risk your hard-earned cash without building some serious muscle memory in a demo account first. Setting up this demo sandbox on Exness is actually remarkably straightforward. You just log in and click Open New Account. The absolutely critical step here is making sure you explicitly choose Demo Account and select the MT5 platform. Now, just for practice purposes, the source recommends setting your leverage fairly high, like 1 to 500, and giving yourself a theoretical starting balance of $10,000. Remember, yeah, this is monopoly money, but you need to treat it with respect. Click Create, and boom, your account exists. But, an account sitting on a website doesn't do you much good when you're on the go. Let's link it directly to your phone. Open up the MetaTrader 5 app, tap Manage Accounts, and hit that little plus sign. You're going to search for Exness and select the specific server name they gave you when you created the account, which is usually Exness MT5 Demo. Just punch in the login number and password from your Exness dashboard, and you are connected. Your personal flight simulator is now fully operational and sitting right in your pocket. All right, section 3, executing your first trade. Okay, grab your seatbelts because we are moving to the main event here. When you actually go to place an order, MT5 is going to ask you what type of execution you want, and it's absolutely vital to know the difference. Market execution means you are jumping in instantly. You are buying or selling at whatever the absolute current market price is, right this very second. A pending order, on the other hand, well, that's for the patient trader. It tells the broker to buy or sell only if the price reaches a very specific future number. It's basically how you snipe precise entries without having to just stare at the chart all day. For our first trade, though, we're going to stick with a market execution. Let's put you directly in the driver's seat for a second. Let's say you've analyzed the chart and you expect the euro against the US dollar, the EUR-USD pair, to go up from its current price of 1.0800. Now, because you think it's going up, you want to buy. Notice how all these safety parameters are structured spatially. You are buying in at 1.0800. Now, if you're wrong, you obviously don't want to lose everything. So your stop loss goes below your entry. In this example, it's 30 pips below, sitting at 1.0770. But hey, if you're right, you want to get paid. So your take profit goes 60 pips above your entry, at 1.0860. And crucially, we're using that 0.01 microlot we talked about earlier. Safely contained risk. So here are the exact buttons you need to press on your MT5 app. Go to the Quotes tab, tap ER/USD, and hit Trade. First things first, confirm your volume is set to 0.01. Do not skip that, unless you accidentally want to buy a small European country. Next, type in that stop loss of 1.0770 and the take profit of 1.0860. Finally, tap that big blue Buy by Market button. And that's it, you did it. You are officially in the trade. And remember, you can always jump over to the Trade tab at the bottom of your app to monitor the position, modify your targets, or even manually close it out early if you ever need to. Which brings us to Section 4, Mastering Risk Management. Okay, let's slow things down for a second. Take a breath. You've executed a trade. But listen, execution without protection, that is literally just gambling. The heavy armor that's actually going to help you survive these markets over the long haul comes down to the sacred law of trading from the source material, the 1 to 2% rule. The guide is super emphatic about this. You must never, ever risk more than 1 to 2% of your total account capital on a single trade. If you're working with a $1,000 account, you should never lose more than $10 or $20 if your stop loss gets hit. Strictly sticking to this mathematical rule, that is exactly what separates the professionals from the amateurs who just blow up their accounts in a week. Now, you might be thinking, but how on earth do I figure out the math in the heat of the moment? Well, the secret is you don't. You train your risk management muscle by using a simple online lot size calculator, like on MyFXBook or Baby Pips. You literally just type in your account balance, tell it you want to risk exactly 1%, input your stop loss size in pips, and pick your currency pair. The calculator instantly spits out the exact lot size you need to type into MT5. It completely removes all the emotion and all the guesswork. Finally, Section 5, Your Daily Practice Routine. See, trading isn't about wild, erratic actions. It's entirely about disciplined, repeated processes. The source guide outlines this perfect daily checklist for you to follow. Every single day, you open your 1 hour or 4 hour chart on a really liquid pair, like URUSD. You predict the direction based on the current trend. You identify exactly where your stop loss and take profit logically need to go. You use that online calculator to perfectly apply the 1% risk rule. You execute. And then, and honestly, this is a massive one, you limit yourself to a maximum of 1 to 2 trades a day. No overtrading allowed. Finally, you write the whole shebang down in a journal. What did you win? What did you lose? And what did you actually learn? So, how long do you actually stay in this flight simulator? Well, the guide recommends what they call the 1-week demo rule. You want to stay in your demo account just long enough to master the buttons. Practice for 1 week maximum just to build that crucial muscle memory so you aren't fumbling around with the interface. Once placing a trade with a stop loss and the correct lot size feels like second nature, it's actually much better to graduate to a live account using those tiny 0.01 microlots. That way you can start experiencing the real, actual psychology of trading, but with incredibly minimal risk. And there you have it. You now hold the ultimate execution playbook. You know the terminology, you know exactly how to configure your platform, how to accurately place an order, and how to shield your capital using the 1% rule. But executing the trade, that's really just the beginning of the journey. The real question is, how deep do you want to go next? Do you want to master specific high-level entry strategies? Do you want to dive deep into advanced trade analysis, or maybe get a hands-on practice guide for marking up your charts? The foundation is officially built. Now it's time to decide how you're going to trade. Thanks so much for joining me on this explainer, and I'll see you in the next one.